going to talk about Muneeb's Blockstack's Reg A+, and I'm going to have you explain what it is to start with. But before that, this morning in my opening remarks, I talked about the different ways that tokens are being issued nowadays, and there was a list from the top down by level of difficulty, and the easiest was the ICO at the top, and I said that, especially last year, if you could fog a mirror, you could raise an ICO last year. Now it's a bit more difficult. But at the bottom of the list, at the highest difficulty scale, I had the Reg A+, because there's a lot of kind of difference between an ICO, the way we used to do them, and the Reg A+. So first tell us what is a Reg A+, and then walk us through behind the scenes. Hopefully you can say as much as you can about the process you went through, unpack it for us for the benefit of others that might be thinking about it, because there aren't too many. I mean, you are the first that was public with it. I think Props is doing a similar process. So let's talk about Reg A+.
Yeah, absolutely. Hi, everyone. Muneeb here from Blockstack, and I wish I could display a full disclaimer on the screen, but my lawyers would like you to know that we have a public filing with the SEC, and sometimes if I appear on stage and I'm talking, it could be considered testing the waters. I'm not trying to sell anything right now. We are just having a conversation about some background of our project and what we're doing. So in terms of Reg A, these are basically legal frameworks from the SEC that are meant to allow unaccredited investors, so the general public, to basically participate in public offerings, right? So and there are different levels of kind of like capital limitations, like how much can you raise from it. The highest level is what's called a Reg A+, where you can raise up to $50 million in such an offering, right? So these are different from IPOs, but sometimes, like, you know, to simplify, I tend to I don't like this analogy, but sometimes I say that you can think of this as a quote-unquote mini IPO filing, right? So you go through a lot of the similar kind of like steps and disclosures and financial statements, and then you can potentially raise capital through this framework. And so give you a little bit background on what we did, why we did it. Blockstack is a decentralized computing network. We raised venture capital in the beginning to explicitly do R&D work for our core infrastructure, and then we built that out. And when we were launching our Stacks blockchain, we looked at different legal frameworks for how to basically do this offering within applicable law. And we had a core community of developers and enthusiasts in our open source community. And at that time, we couldn't really figure out a legal framework where in the US, you could open up our token distribution to the general public. Like large funds or accredited investors, they could participate. So we raised around $47.5 million in that round in fall of 2017. But we gave our core community kind of like these vouchers that let us figure out the legal framework. And once we do, you guys can come back and basically effectively get the same price as the accredited investors. So since then, we've been kind of like doing our internal research work to figure out what's a fully regulated way of opening up our token distribution to the general public, including the US. And I think including the US is the key part here.
But it's been a long process, right? And it took a lot of your time and money. Would you do it again? Is this something you recommend to others? Because there are different schools of thoughts. Not all lawyers recommend going the Reg A+ route.
Yeah, absolutely. I think the short answer is yes. The long answer needs some more context around it. So basically, I think when we were looking at it, we basically realized that there are 4 options available. The first option is that you just block the US investors and go outside. It's a little bit easier for projects who are just starting right now, and they don't have any existing investors that are US-based. But if you have already raised some capital from US investors, it gets more tricky that how do you now basically effectively return their money, or how do you figure that out? But in general, like we believe that the US markets are very important. If you're building a global decentralized network, you should be able to open up the US markets to it and let US companies, Silicon Valley is here, a lot of tech companies are here, and they should be able to participate in your network. So that option we did not want to pursue because we wanted to open up the US markets. The second option is that you try to figure out how can you do this within existing regulations, and that's the path we ended up choosing. The third option that some projects are evaluating is how can you actually change the law? And we thought that would be a much longer process than trying to fit into existing regulations. And the fourth option, which is the most scary to me personally, is that you just go ahead and do it anyway and then take the regulators to court. And that's the one that I obviously personally don't feel very comfortable with.
But tell me, how are you going to put the tokens in the hands of users? Because what you did, you solved the issuing step, which is give me dollars and I'll give you tokens. But then how are you putting those tokens in the hands of users? What is the SEC telling you? Have they approved, or do you think they will approve in the future, allowing you to do that?
Yeah, so I think the way to think about this is that our network is already live. There are more than 100 applications built on the network. They have real utility. And the people who were able to participate in 2017, we have already distributed the tokens to them. So you can use the tokens to register digital assets and smart contracts on the network, use them in applications. And the legal framework is about basically, it's the issuance mechanism. It's that what is the legal framework that you're using to get the users in the hands of the general public, right? Once a token is issued and it's on the Stacks blockchain, the tokens are fungible, right? So there's like no difference between the tokens that we distributed earlier versus the tokens that we would distribute at the closing of the public offering if we get the SEC qualification, right? So the focus should really be that you need the issuance mechanism, and after that it's just technology, right? Like we would distribute the tokens, and people can give us their wallet addresses in which those tokens would appear.
Are those users developers, or are they? What are they doing with it? What's the functionality of that token?
The Stacks token is used as fuel on the network. So if you're a developer, you're publishing an application, you need these tokens to basically publish the app. If you're a user, every user gets a universal username. So it's your same username across every application. You don't have to create like new accounts. Same for digital assets. If there is an app that is registering some digital assets, tokens are consumed when you're registering those digital assets. And a big use case is obviously smart contracts. When developers publish them, or when when users want to execute the smart contracts, you need to send tokens to those smart contracts. So think of it this way, that we as a company don't control this network, but there needs to be some sort of an access control for the resources on the network, and the token plays a fundamental role there.
Okay, but I just want to go back to this point. Are these tokens classified as a security or as a utility?
So our view is that the tokens are clearly a utility token. Again, as I said, that the network is live. There are applications in which you can use the token. And we actually looked into international jurisdictions as well, where in different jurisdictions around the world, they don't really use the Howey test like the SEC. And we actually believe that the token is clearly a utility token in some of these jurisdictions. And we actually talked to local lawyers who confirmed our opinion as well. In the US, the approach that we are taking is that due to an abundance of caution, we are going to comply with all securities regulations anyway. Right? So in the US, we are treating the token as if it was a security.
So it's kind of both. It's a security on the issuance, but it's a utility it must be a very happy token, because that's not too many tokens are able to be, I mean, Ethereum is out of the gate, Bitcoin is out of the gate. The SEC is not touching maybe the top 100 coins, but there are others that are trying to get some air, like get lifted, and maybe they were issued as a security, but they have such a utility, but the SEC is not recognizing that. Do you trust the SEC? Are they going to give you a no action letter at some point, or is that part and parcels of the Reg A plus?
So we're not asking for a no action letter. We are asking for a qualification for our Reg A, and I think in my experience, like they're very thoughtful. They actually understand the technology, and they understand how important some of these decisions are that they're making, because they set precedent for everyone else, not just in the US, but outside as well. I was just in Asia. I was talking to some exchanges in Korea, and it was very clear that everyone is kind of like looking to the SEC, and in terms of like what they end up doing and how they set precedent for other projects that might follow.
It's been said that your Reg A Plus cost between $1.5 to $2 million. You're not going to deny that, right? So how could something that costs so much money be a standard or be the modus operandi kind of doing these tokens? Not many startups can afford that.
Absolutely. So I think because we're the first ones that are trying to figure out the legal framework, a lot of the fees were actually cycles with our securities lawyers in terms of like, I'm trying to be the bridge between the technology and the securities regulations, trying to learn that world. And sometimes we would actually do a legal analysis and then present it to the SEC. That this is our, and all of that information is public. We have done a public filing. People can go and read that analysis as well. I don't think other projects would need to do that, right? Like once a project gets the qualification, people would have some sort of guidelines that this is what this project did. Obviously, every project is different, and you would have to tune the framework to exactly what you're trying to do. But at least there would be some sort of a framework available from a project that you can pretty much reuse. So my expectation is that the cost would actually go significantly down in the future.
So what you're saying is you think that the SEC was trying to come up with a template somehow, or so you're almost like a guinea pig. You help to fund their research, and I mean, if it costs the next company $500,000, I mean, or a lot less, that's great. You would have paved the way for that group.
We're considering it a donation to our industry.
That would be good. But why did it take so long? I mean, at the end of the day, it's the document, which is a lot of disclosures. It's really disclosures about almost like an IPO, saying all the risks, explaining what it does, what it doesn't do, but why does it? I still don't understand why did it take almost a year and so much money for that document?
Absolutely. So I think let me go back to my analogy that I don't like, the quote-unquote mini IPO. If you think about it, I think sophisticated investors can do their own analysis to understand the risk profile of a project. But if you're trying to raise capital from the general public, you almost like you owe them all these disclosures. You want to help them understand all the different risk factors because they're not sophisticated investors. And that's the job of the SEC. They're there to protect the general public markets. And in many ways, I think I believe that it's a very healthy thing for our industry. It will help mature this industry where we have seen, bad actors in the space. We have seen projects which are pretty much like vaporware, and they would put up a white paper and are able to raise capital. If these disclosures are there, that means there's less information asymmetry between the project and the information that is available to the general public. Like imagine that we have like fully audited financials, like you have full information on who the company directors are, the key employees are, what their holdings is, like every single thing that you need to know about the project. It's almost like an IPO, right? Like when you're looking at, should I participate in this offering? you should have a right to this information. And that is something that doesn't happen in the crypto industry. And I think it would be a very healthy thing. It would help our markets mature if more projects start taking this route.
What if they don't approve it? Because you said something that this is a filing with an expectation that, so what do they have to approve and when? And what if they don't approve? What happens?
Yeah, so it's called a qualification, and we privately did 2 rounds of filings with them. They gave us comments back. We basically responded, and internally, so again, this is just our view, right? This is not the SEC's view. Internally, we felt confident enough that we have resolved most of the bigger issues that we filed publicly. In fact, we filed publicly again just yesterday night. So we're making progress, and fingers crossed. Like we hope that the SEC would qualify this soon.
What is soon? Like, are we talking weeks, months?
I can't really comment on the timeline. It's really in their hands. And in terms of like the risk that, hey, what if this never gets qualified? I think it would be a very unfortunate scenario, but it would give us basically no other option but to block out all U.S. investors.
And refund them?
No, but they won't be able to participate in the upcoming.
Oh, right now, so it's a promise. You haven't taken any money yet?
We haven't taken any money from.
But you've gone to Asia, though. How do you contrast the environment in Asia? Your tour in Asia was to raise visibility and money as well.
Yes, I think for Asia, one thing we noticed is that we are, being a U.S. company, having so many investors from the U.S., we've been very focused on the U.S. markets. So we're trying to pay more attention to Asia. It's a very important market. So I spent some time in like 4 or 5 different countries, and it's a very thriving market. Like,
how is the appetite there? I mean, you have paper commitments. People are throwing money at you, more or less?
I think in general, like we have capital, so our purpose of the trip was a little bit different. It was for me to learn about the market. It was to identify who are the different key players who can help us in the long term, and also really figure out, like, if you're launching in Asia, basically what should be our strategy in terms of having a permanent presence there, and not like you can't really have. You can't really treat Asia as like I'll visit it like once a year and hope to kind of like enter those markets.
What was the biggest learning? Because you and I were there in January in Hong Kong. We went back again 2 weeks ago. What is 1 or 2 things you've learned recently?
I think the biggest learning is that there's no Asian market. It's actually very different regions. So if you go to Korea, for example, a very interesting fact that more than 50% of the population actually has crypto wallets, right? And they're very comfortable with owning digital assets because gaming is a big cultural thing over there. So they feel very comfortable owning these digital assets. Similarly, some of the big players, so Kakao is their messenger is kind of like the WeChat of Korea. Everyone uses it, and Kakao is working on like a real blockchain implementation. Like they're not just like riding the hype. They're taking this technology very seriously, and in many ways, over there, the feeling that I was getting is that people are more open to trying out new technology relative to the U.S. Like I think there's a little bit of a resistance that why would I use this new thing, whereas people tend to jump more because it's new and because it's exciting and they want to try it out.
So what would happen? What would it unlock for you the minute that the SEC approves this? Is this like a really big turning point? What would happen then?
For us, the biggest thing is that means that we can open up our network to the general public. The key community around Blockstack, the developers, the enthusiasts who've been helping us for many years, they would be able to get their hands on the tokens. They would be able to use it on the network. And in generally, that means that the network basically opens up to anyone, both within the US, outside of the US, people who are accredited investors or people who are not accredited investor. And that's a really big deal for us.
Could Binance list your token without telling you, like they did with Cosmos?
I think there are things that we cannot control. The blockchain is already live. If some exchange is trying to work on it, like in general, we don't want any price fluctuations during our public offering, but there are things that are beyond our control.
Okay. Good luck, Muneeb. Thank you very much.
Thank you for having me.